Okay, so I'm gonna test if the volume is okay before I start. I might need to readjust this trading view here. Okay, I'm gonna restart this trading view. To readjust this trading view here. Okay, I'm encountering some problems here. I need to reset trading view. It's not loading. Okay, let me try this again. Okay. Okay, it should be up now. Right, I'm just gonna double check on the live feed. Okay. You might hear some echoes here. Okay. You might hear some echoes here. Right, I think it's settled. Let's start. So let's start off on the weekly chart for both ES and NQ. Right, I will be using the December contract and as well as the continuous contract, right? Usually I would much prefer to use the continuous contract, but because we just had a contract expiration and rollover, so I'm gonna use both of them for now, and then I'll transition it to the continuous contract following, I think after next week, which means it would be in the last week of September. Okay, so right here on the weekly chart, just take note that this is the December's contract, right? So we are seeing some respect of this higher time frame level, right? The weekly on the block down here on Nasdaq, and over here we have the respect of the weekly CB coupled with the order block on ES as well. Okay, so this is on the weekly, and of course we do have a higher time frame level that has yet to be tagged into, right? If we just take a look on the monthly chart, NQ, we have this large inefficiency down here, and for ES, it's right here as well. So I mean, like, it hasn't really completely repriced or rebalanced or redelivered, whatever you want to call it, into the full range of this inefficiency right down here. Okay, so there is a chance, I mean, there is a possibility that it wants to come down here. Okay, so it remains to be seen, but overall on the weekly time frame we are bearish. Okay, on daily it's even clearer, right? So you can see that right down here the highs are being, what do you call it, rejected. Okay, so right here we have SMT here, Nasdaq and ES, this swing high versus this swing high. Okay, so SMT on the indices, and right down here we have price respecting the order block. Okay, for ES, I mean for NQ, it's this order block. Okay, you can even use this order block right here. I mean, I think they're both the same. Preferably, I would prefer to use this order block here because this was the order block that caused the purge of the buy side right down here. Okay, so this order block is being respected twice already, and we have the true month open right here on this candle, 12th of December. Okay, so bearing in mind that we have true open down here, right? I'll just highlight it in purple. True opens are usually what do you call it? If you're bullish, you do not want to see price trade below the true open for a substantial amount of time, which we are having right now, and you really want to see price continuously to trade above the true open if you're bullish. But right now we are having the opposite effect of it, so we are not spending a lot of time above true open. Okay, so that's an issue. And seasonal wise, second half of September is supposed to be bearish for equities. Okay, so it's kind of tipping a 10 right here. So due to SMTs and unable to break higher highs, right? And it's also rejecting highs right here, as you can see, rejecting this high here on ES, right? So for ES, I would use this order block here because this order block is the is the candle that took out the buy stops up here. Okay, so this entire range is the order block. So you can see that it reached almost touching the opening, but failed to do so. Okay, but then you can see that the price is closing in the vicinity of this inefficiency here, which is also a daily CB. All right. So sorry. So the price is respecting higher time frame bearish PD arrays, and then we are rejecting highs as well. Okay, this is on the daily, right? True open for ES, it's right here on the 12th of September, and then right here we are trading lower. Okay, taking out this swing low here and then this swing low here for NQ. All right, so on the 4 hours, same thing here. Okay, breaking this low that made this high right here, closing below that as well. And then we have relative equal lows down here for NQ, and then relative equal lows down here for ES. So I think that would be the next objective moving forward into next week, and I think that would be the objective for the first 2 days of the week, which would be Monday and Tuesday. Wednesday we have FOMC in the PM session, so I would presume, I'm anticipating that FOMC is going to create the high of the week, so maybe we would trade into a bearish PD array somewhere within this inefficiencies here and here for NQ and ES respectively, and then price would continue to trade lower. Okay, that is my expectation for FOMC, but it all remains to be seen. FOMC, it's known to be manually intervened. I mean, like manually adjusted. Okay, let's just put it that way. So FOMC wise, I will be focusing on the first. Um, there are usually two stages of that. I've discussed it previously. So basically, ICT teaches that for FOMC, the first impulse would be a false move. So between 2 to 2:30, that would be the false move, and then 2:45 onwards, you would see the real move start. Okay, so um, usually how do I trade that would be I would wait till 2:45, but recently I've learned that, I mean, Trader Day, DAYE, has shown that quality theory. So I'm going to apply that into FOMC, and then we'll see how this works out. So basically I'll be looking for trades at around 250, right? Because 250, that would be 10 minutes before 3 o'clock. 3 o'clock would be the manipulation of, not manipulation, but Q3 of the PM session. So that should be the highest probability setup right then and there. Okay. So this is the 4 hours for the equities, basically ranging, right? This is a range here. Okay, so because I'm leaning bearish on equities, I would like to see this trade lower due to the fact that we have SMTs on the highs and the dollar index is rallying as well. Okay, so how far can it trade below or trade um, like I wouldn't use the word crash, but let's just use that for a simpler term. Okay, so how far can it crash down? I would be looking for NQ. I'll be looking at this equal lows down here, right? So these equal lows are also a monthly fair value gap inefficiency. So um, I am seeing price is going to reach into this area. Okay, and for ES, I'll be looking at this volume imbalance down here, and as well as this swing low down here if it was to overextend, right? Other than that, that's my bias for equities. Okay, I'm going to show you the continuous contract, and you can compare and contrast to see what's the difference. So this is the continuous contract chart, right? So for NQ, there won't be I mean, for the continuous contract chart, um, there isn't any SMT. Okay, so right here, as you can see, higher highs, similar higher highs, and higher highs as well. Okay, higher highs from this high as well, and this high is taken on the continuous contract, right? Similar to this high here. So there isn't really much SMT unless you want to pull in Dow Jones. Okay, so the YM, there is SMT on this high here. Okay, basically you can use this high, right? It's almost the same timing, and Dow Jones is making lower highs as compared to um, ES and NQ. Okay, so if you really want to force that SMT, it would be on the Dow Jones. But I would really much focus. I would much prefer to focus on the True Open. Okay, so True Open wise, it's right here, and then you can see that price has bumped highs 3 times. So this could be a 3 drives pattern, and then usually tops forms like this. All right, one of the ways that tops can form, right? The 3 drives pattern. Okay, and you can see that it's rejecting highs. Okay, so whenever it trades above this swing, I mean a swing high, it rejects. Okay, trade above this swing high, rejects. So this is bearish price action, and it's also within a um bearish fair value gap, and as well as this order block down here. These last two candles, these last two up close candles, they are your bearish order block. So right down here, as you can see, the opening price, I'll highlight in red. Yep, so it's respecting this order block here. Okay, for ES, similarly, right, it's disrespecting, I mean, like these, the we call it rejecting. Okay, rejecting swing highs. Okay, so right here, swing high, rejection, and then here there's a swing high that was purged as well, rejected again. And then if you look at the point of rejection, right, this is the two up close candles before the impulse move lower. So I would use this as the bearish order block, right? Opening price, okay, 4566. The high of this candle, 4566. Okay, this is not random. Okay, so this is perfect to the T, right? And right now, obviously, because it has taken out this swing low, I believe. This low was 44.95. The low here was 44.94. Yeah. So because it has shifted bearish right down here after taking out a liquidity pool, I am expecting this to trade lower, right? And as well as it has a Judas swing above and after true month open. Okay, so let's see how we trade next week. All right, so because I'm trading on this chart, right, the December contract. Next week I'm going to be using this chart here. So what am I anticipating for next week? I want to see if Monday creates a inefficiency right here, a fair value gap. Okay, and if it does so, I would much I would really love for Tuesday or Wednesday to trade up into this inefficiency. Okay, I'm anticipating price. Okay, so there is going to be I'm anticipating an inefficiency right here, and I'm expecting Tuesday and Wednesday to trade up into this inefficiency here, and then on Thursday and Friday we distribute lower to take out the lows or fill out these inefficiencies down here. We have two volume imbalance, and then we have swing lows sell side, and then eventually I think on the final week of September we're going to gravitate down into this monthly fair value gap. Okay, so I'm expecting low resistance liquidity run, which is why I gave the 2 weeks time frame for this low. For this monthly fair value gap and daily equal lows. Okay, for Nasdaq, for ES similarly, this equals down here is definitely going to be attacked, I think, right? So I would like to see it create a inefficiency here as well, and then starts to trade lower. Okay, um, that is what I'm expecting for equities. Okay, so heading over to DXY. Obviously, I am looking for this high to be traded to, and then I want to see disrespect of the monthly inefficiency up here, which is also a sell side buy side imbalance. Sell side inefficiency and buy side. No, sell side imbalance and buy side inefficiency. Okay, CB. Let's keep it short. A bearish fair value gap. So I'm expecting price to disrespect this bearish fair value gap and trade higher. Okay, because we are in general macro wise, we are in a uptrend. So use I would read this as accumulation, and then you have the manipulation in Q2 or Q3. I think in July was Q3. So Q1 and Q2 you have your accumulation, and then Q3 your manipulation, and then Q4 will be your distribution higher. So that is what I'm expecting for DXY. So if that's the case, then it lines up nicely for bearish equities as well, right? And if you take a look at the bond prices, they are bearish as well. So higher time frames, we are lining up very nicely for bearish prices in the overall markets, right? Except for the XY. Okay, so that is for the XY. All right, so let's move on to, as usual, gold. Let's take a look here. Gold. All right, so gold on a weekly kind of like sideways consolidation, reaching into this, but if you take close, like if you look closely, it's staying within this inefficiency here. If you're really bullish, you don't really want to see it stay within this inefficiency after taking out a sell stop. So right here, gold is consolidating, but I think overall it's bearish because the dollar is bullish. Okay, so I'm gonna lean bearish on gold, and then let's take a look at Bitcoin to see if anything has changed. Right, so far nothing yet. Nothing has changed. Right here, this level here is a 3 month inefficiency fair value gap buy side, BC. So I'm still anticipating this level to be tagged maybe once it reaches half of this wick here 50% of the weight, consequent encroachment, and then I think it would trade lower for Bitcoin, and then I want to see if it wants to trade higher, right? I'm treating this as a range. So range low, range high, you have the equilibrium right down here. Okay, so I want to see it. I would much prefer to see price trade above 32, right? But as I've mentioned in the last video, Bitcoin futures contract has already purged the inefficiency above. So I'm not sure if this, right, this is the Bitstamp chart. So I'm not sure if this is going to be, um, it's going to be purged right here in this chart. Okay, so remains to be seen, but overall, as you can see, low probabilities for Bitcoin. Right, so let's head over to HSI. All right, I'm covering all the majors first. HSI futures. Okay, so similarly, I'm expecting bearishness for HSI. Okay, we are in Q3. This is the weekly chart. All right, right here in the 25th of September, we would end Q3, and then I would like to see distribution in the fourth quarter. Okay, so right now you can see that a swing high is created, and then price is respecting this fair value gap. Okay, this bearish fair value gap, right? I don't really want to see any closes back into the fair value gap, especially the midpoint, right? The consequent encroachment of the fair value gap right here. Okay, so right here on this candle, it traded up all the way to 25% and then rejected again. And then right now, we'll have to see how it opens, because I think the candles adjust once the market opens for some reason, because this candle here was supposed to close here, I think, based on last week's analysis. So I mean, like, there are some changes, but we'll see how this candle close. I mean, this candle close. Okay, when the market opens, it's kind of tricky for the Hong Kong index. But anyways, I remain bearish on HSI. I don't really want to see this swing high taken out, so I would expect continuous trading lower prices. Okay, this is for HSI, and as usual, I would like to see this um, taken out, and then I want to see speed below this swing low here, and that will indicate that we are most probably going down here. Okay, so right here through year opening, April, I've mentioned this last video, I think last video or last two videos, not too sure, but this is from Daye, right? Mentioned his name or social media name, whatever username. I mentioned his name a lot. So I learned this from him. So if you're bearish on a certain asset or stocks, you don't really want to see the true year opening, which is the opening of April, to be traded above if you're bearish, right? You want to see price spend as little time as possible above true year opening, and then starts to decline lower, and this is what we get on HSI. So I am bearish on HSI, at least to the end of the year. Okay, um, you can reverse it if you're bullish. Okay, so that is for HSI. Right now, let's move into Tesla. I'm just gonna cover one or two. Tesla, I'm looking at 314. Okay, let's see if it respects this order block down here. But I really like 314 before we even consider any downside. Okay, for Tesla, that is what I would prefer. Right, and let's move on to what else? Palantir. Let's take a look at Palantir. Palantir, nothing much. Okay, let's jump over to Disney and be done with the US stocks. Disney. Right. So I think last week or last 2 weeks, I've mentioned that I would like to see 74. So right here, as you can see, it's trading what? It's keeping this low intact. Okay. Swing low here. and then there's a swing low here. We have equal lows, and then right below the equal lows, we have a higher time frame PE array. So right now, as you can see, price is trading up into what, this order block down here, this bearish order block. Okay, it took out the buy stops and then ran lower. So I really want to see this respected, right? I really want to see this bearish order block respected, and um and from here price would start to trade low. I don't really want to see a closure above the mean threshold of this order block. Okay, so you take the high and the low, midpoint, that's your mean threshold. So remains to be seen for Disney, right? So far, what it's doing is reaching into equilibrium. Okay, above that would be premium. That would be opportunity to sell short for smart money. I mean, if you're looking to short Disney, whatever. So that's my um, idea for Disney. Okay, right. So let's move on to Baba. Now, as I've mentioned before, just take a look at the new year. I mean, the true year opening gap. I mean, the opening price, right? Didn't spend too long above, right? Down here as well, acting as resistance. So right here, let me see if this swing low was traded through 86, 86, 86, 82. Okay, so this swing low was broken on this week. So let's see if Baba wants to accelerate lower. As I've mentioned before, as long as it's kept within this range here, range high, range low, I don't really have a strong bias. Okay, I need to see price leave this range. Okay, so far what is it doing for Alibaba? Accumulation. Okay, um, moving from discount to premium and then premium to discount within this dealing range right here. Okay, I just draw it out for you for a clearer picture here. Right. So equilibrium, discount to premium, premium to discount. Okay, so it's just ranging, consolidating. Okay, right here, what made this impulse higher? Okay, we have this bullish order block, right? These two down close candles is your bullish order block, and then the opening price. Look at the reaction. Okay, so how high did it trade into? Filling up this volume imbalance down here, and then trading into the mean threshold of this order block, this bearish order block down here, right? Mean threshold right here, and then rejected. Okay, so it's respecting this order block right here. So if you're bullish, you really want to see price close above the mean threshold, but right here it fails to do so. So trade it respecting this area here. I mean, respecting this order block, trade it lower, breaking a swing lows. Okay, so what I want to see following in the next following weeks, I would really like to see if price wants to gravitate lower. Okay, take out this low. I think minimum this low is going to be taken out. Okay, if you look at this is your retail phantom trend line, right? So this is what um, people usually draw, right, as support, right, trend line higher. And then you can see that whenever you see this trend line and then you see 3 points of swing lows, and then when this highest low is broken, expect at least the minimum a purge of this swing low here. And if price is going to overextend, then it's going to have speed below this swing low into this swing low here. Okay, that would indicate super bearish price action, and then we're most probably going to overextend. All right, so that is what I'm looking at for Alibaba. All right, next we move on to JD. This is going to be the last one, and I mean, maybe I'll cover new, but let's see. All right, so for JD right here, ultra bearish. It's respecting this fair value gap very religiously. Okay, creating a swing high up here, right? I don't see this high being attacked until a low of 30.84 is taken. I've given this analysis, these two levels down here in a Discord group. I'm not sure if anyone remembers, but if they do, good for them. So I've anticipated this level here. Why? Because this is the closest swing low here, and then overall we're bearish on the markets, right? And initially I had a trade idea right here, but it was stopped out. Okay, the invalidation was the closure above the mean threshold of this bearish order block. All right, so it took out this swing high here, creating what? Three drives: one, two, and three. So three drives higher, and then it crashes, right? So typical topping pattern here, right? So right here, as you can see, price is trading lower, taking out this swing low even, I think. The low is 31.57, 31.40. Yeah, it's taking out the swing low. So next week, I want to see speed below. I want to see speed trading down into 30.84. Okay, for next week. All right, that will indicate bearishness, and then we would most probably be trading into this blue shaded area. That is a old inversion on the monthly chart, I believe. Let's take a look. Yep, the monthly chart. So that would be a old inversion fair value gap on the monthly chart, which is also a balanced price range. So I expect to see some form of retracements when it reaches into that blue shaded area. Okay, so you can divide this area into 5 different levels: the high, the low, the mid, the 25, and the 75%. Okay, so these are the levels that the prices are gonna reach into, and ultimately I want to see if we can trade below this low here. We have really good sell stops down here. Okay, below that BPR, right? It price can wick through the BPR, but as long as the body stays within the BPR on the monthly chart, then I think we might see some form of a um, reversal on the lower time frames. But then at the same time, when you look at the price action like this, it really looks like it's gonna attack the lows here. Okay, the low here was 1951 and the low here was 1921, so they are relatively equal, right? So I'm expecting that to be attacked as well eventually, right? So the original consolidation that led to this high here, the low that made the high, I think it's reaching down for the lows. Okay, that is what I'm anticipating for JD. All right, and yeah, I think that's it. Let's take a look at new if there's anything. For new, not very pretty. I shall not comment. Okay, so lastly, I really want to cover what I really want to cover is oil, US oil, right, on the monthly chart. So you can see right here, okay, right here for this candle, it took out the lows of this entire consolidation for oil. Okay, and what happened after it took out that low? Traded higher, taking out this high here, and then traded even higher after coming back down into this breaker. Okay, this up close candle here is the breaker, right? As you can see, the price trades into the high of the breaker right here. Okay, and then it trades higher into relative equal highs up here, and then up into finally this bearish order block down here. Okay, opening price of the order block. Okay, what I'm anticipating is that price is gonna reach up into this all-time highs. Okay, just take this entire thing as a range. So you get the range lows and the range high. So after taking up the lows, it's gonna gravitate up into the high. Okay. Right now we are, I think, around the mean or slightly above premium. Yep, we are above premium now. So right here was discount. Okay, below the mean, it was discount. So this right here, okay, I think this is the 3 month in inversion. Yep. So on a 3 month chart, this fair value gap was the price. Was the price level that sent the price lower to take out the sell stops. Okay, so this area is sensitive. As long as price remain above this level here, I am bullish on oil, right? If you're bullish on oil, that means we're gonna have a hard time because oil is a form of indicator for inflation. Okay, which means I'm expecting inflation to rally again. So because it has respected this level here, and then on the monthly, we are closing and trading above a swing high after taking out a swing low. Okay, market has shifted bullish again for oil. Okay, and the last remaining liquidity for oil is this high here and this high here. If you use the fibs, right, let's just use the opening, the bodies of the candle. Okay, the last impulse, and then up here we have 1.5, and up to this high here it's 2 and 2.5. This is the perfect range if you're going to expect some form of strong retracements or reversals. Okay, so this is way too perfect, which is why I'm looking at all-time highs for gold. Not for gold, but for oil. Okay, and if that's to happen, then we're really gonna have a tough time in terms of world economics. Okay, and how high? Let's say if it closes above 2.5, then we will be looking at 4. But let's not get there first, right? That would be shithole if it reaches here. For the world itself. Okay, we're gonna really, really have a hard time, right? Um, Going through our daily necessities, right? At least in the US, for example, right? Because this is based on US dollars, and if oil is going to rally based on US dollars, I mean, people in the US are really going to have a hard time going through their day by day, right? And that would not be nice for the equities in general. So yes, I'm expecting higher prices on oil on the higher time frames. Okay, that is what I am looking for, and I am anticipating that. And I think that's it for this session. I hope you enjoyed it, and if you find value, right, do leave a thumbs up. If you have any other stocks that you really want me to and do some analysis on it, do leave it in the comments section down below. And I'll see you guys in the next session, right? And stay safe, right? Prepare for the worst if this really comes into fruition, right? Just prepare yourself mentally and, of course, if you can, physically, right? ICT has been saying this for many years, but it seems like it's finally coming into fruition. So, I give credit to that man, and right here, the price chart of oil is kind of confirming his thesis. So, not just thesis, but his forecast as well. So, all credits to him, ICT, right? And yep, take care. I'll see you guys in the next session.